In order to be consistent in the market, you need to have a detailed trading plan and keep it up to date. Discipline is the number one factor that will affect your P&L in the market. You can have all the setups in the world, but sticking to your trading plan is what will give you consistency. To help you creating your own trading plan, I've created a list of 10 items. I will post it in the comments below that in my opinion are super important to include. You can tweak it, play it around for your own likes and dislikes. However, make sure you stay in your lane and stick to this trading plan in order to become a consistent trader. Hey there, Tamir from Fibonacci-Traders.com here with another daily market video. So, please hit the like and subscribe, and without further ado, let's hit the charts. SPY on the daily, as we can see, trend lines. As we always say, trend lines are the true support and resistance for price action. This is not magic, this is only technical analysis. As we can see, once again, price reached the yellow trend line. This yellow trend line we are talking about in the past several months and weeks. Since December 2021, January 22, every time price reached this trend line, it got rejected, and here we are once again. Price reached, got rejected. Let's see if the 390 will hold. Otherwise, we have all the levels to the downside for future support areas. QQQ, same here. Every time price action reached the blue trend line since December of 2021, January of 2022, it got rejected. And not surprising, once again, yesterday's doji off the trend line and today rejected to the downside. 277 needs to hold, otherwise 273 and maybe even back to the 267. Let's see how strong are the bulls or how strong are the bears. IWM looks like 190 is a very strong and a very tough resistance for price action. Let's see if price will retest the orange trend line as support and bounce back up, or will it break back to the downside, and then we have Fibonacci levels for future support areas. Dow Jones, as we can see and as we talked about in the past several videos, 344 is a very strong resistance, and now looks like bulls gave up for now. Let's see 330 and maybe 324 to the downside, following price using levels and trend lines to manage risk. EAN, Solar ETF, great example. Another great example of why trend lines are the true support resistance for price action. Only by looking left, we can clearly see every time price reached this trend line, it got rejected, and now we have two consecutive dojis on this trend line. And as we all know, the doji is the number one signal of indecision. So let's see where price will take us from here. Can bulls finally break up above and close 2 or 3 days above this trend line, or it's bears all over again, going to retest the lower trend line? SMH 230 is a very strong resistance. Only by looking left we can see no indicators, no Fibonacci, nothing. All we need to do is follow price, where price came from and why it is here now. Look left, we can see that 230 is a very important level of support and resistance. And now, once again, price reached, got rejected. Now we can use swing low, swing high, and now we have all the levels to the downside. And we have this gap here at a 213, 212 area. And we know that more than 80% of all gaps will get filled throughout time. Bitcoin struggling with the 21,500 area, failing to do so, failing to break up and above. Bulls will give up, and we have the 20K and maybe back to the 18,900, 19,000 to the downside. Ethereum, another great example of trend lines. We can see if we go all the way back to November 2021, this trend line is holding as major resistance for price action. And now, in the past few days, we can see Ethereum, doji after doji, breaking to the downside. 1520 needs to hold, otherwise 1400 and maybe back to the 1280. All we need to do is follow price, use levels and trend lines to manage risk. And by really understanding trend lines with candlestick analysis and Fibonacci levels, we can trade any security, whether it's cryptos, Forex, stocks, ETFs, futures, anything has this, everything have the same concept: candlestick analysis, trend lines, and Fibonacci levels. So you don't need to take one course for everything. You don't need one course for day trading, you don't need one course for swing trading, you don't need one course for crypto. It's all the same concept. Candlestick analysis, aka price action, in combination with trend lines and Fibonacci levels. Dollar index, we can clearly see sliding down this trend line. If it will break to the downside, we have Fibonacci levels. Next support will be the 98.60, below that will be the 97 and maybe even back to the 95 area. Oil, crude, once again a great example of trend lines. We can see every time price reach this trend line, it's getting rejected, and now 78 needs to hold, otherwise Fibonacci level, the next Fibonacci level of support will be the 74 area. Below that, we might get another retest of this lower trend line that holds the lower lows. Apple, after a nice bounce of the 124, almost reached this trend line here. 138 as resistance, 135 as support. Let's see where price will take us next on Apple. Below the 134, we can assume 131, 130 will be the next support. We have all the levels to the downside, and if this trend line will break to the upside, at least 2 or 3 days holding above this trend line, we have all the levels to the upside. And if it will go up and above the 153, I will update the levels. So make sure you follow me on Twitter, and you are more than welcome to join our Discord and trade with professional traders. Not an alert service. We trade ideas, we trade together, we share ideas, and we help each other become a better traders, with each and everyone with its own strategy, its own time frame, but we are all our own indicators. Tesla, if you follow me and you saw previous videos, you know that this trend line now price reached, got rejected. We have this gap here at the 123 and we have another small gap here at the 114.40 area. Let's see if, it's not a question of if, it's a question of when these two gaps will get filled. NVDA, after another bull run from 140 all the way to the 176 area, now let's see some pullback towards the 168 needs to hold. Otherwise, we have Fibonacci levels to the downside and we have this small gap at the 150. Let's see if this gap will get filled. Netflix with earnings coming up. 334 area, 4 consecutive dojis of this area with earnings. Let's see when and if we can break towards this trend line here, or are we going back to the yellow or maybe even to the red trend line that goes all the way back to July 22, held also October lows. So we have trend lines, Fibonacci levels, and as a trader, I don't trade earnings. Trading earnings is pure gambling because it can go either side and it doesn't matter if the report is good or not. It's pure gambling. AMD, as we said, we are waiting for a close above the 72-73 area because only by looking left we can see 72 area is a very strong resistance because it was a very strong support. Let's see if we can get a break up and above towards this trend line or going back down, retesting once again the orange trend line that helps us to identify the higher lows. So I hope you find this video helpful. If you do, please hit the like and subscribe, and don't forget to check the comments below for the list of 10 items that are important to include, in my opinion, are important to include in each and everyone's strategy. Thank you very much for watching, and until the next video, stay safe.